oil continues to remain elevated and the focus on the very, very volatile commodity as crude again firms up. The fear of supply disruptions has increased as there's no clear signs on the Iran deal. This has kept Brent crude prices still hovering and firm around $120 per barrel mark. Lifting of sanctions on exports of Iranian oil will relieve pressure on the markets, but the US has now announced further sanction on Russian elites, Duma members and defense firms, which is going to have more implications on the sea-sawing crude prices. There has been no word yet on easing of sanctions on Iran. Back home, we've seen a fuel freeze in petrol and diesel prices after 2 days of consecutive rise when OMC started to increase prices after a gap of over 130 days. Now, the fact that we did not hike prices between November and March has hit fuel retailers very hard, according to a Moody's report that was put out this evening. India's top fuel retailers lost a whopping $2.25 billion due to the freeze in petrol and diesel prices, and IOC's estimated revenue loss is around $1 to $1.1 billion due to this freeze. Let me go across now to Kirit Parekh, former member, Planning Commission and chairman of the Integrated Research and Action for Development. For more on this, Mr. Parekh, thank you so much for speaking with us this evening on India Tonight. Just, your take on these numbers put in by Moody, the kind of losses that OMCs have incurred because of a freeze between November and March, and what it tells us for the way forward, because it's very unclear if the entire burden of crude is going to be passed on to the end consumer.
Yeah, what one has to understand is that our consumption, annual consumption in 2021-22 was around 200 million tons of petroleum products. Now, crude refining is about 7% of the petroleum products. So the consumption of crude itself was 214 million tons. And the domestic production of crude is only around 32 million tons. Though one has to recognize that our consumption of petroleum products, we depend on 85% of imported crude. And a $10 increase in crude price per barrel is roughly equivalent to around $75 per ton. Now, if you look at the last 4 months, whatever India's import cost per Indian basket was around $96 a barrel. But over the last 4 months, and not counting the March increase of $109 a barrel, is at least around $50 additional. And therefore, in my opinion, the freeze over the last 4 months of price freeze, the OMCs have lost roughly $3.8 billion. And, the upstream oil companies, they get internationally import parity price. But the OMCs, their prices were frozen. So this loss of $3.8 billion in 4 months is quite significant. And now if you expect that the price of crude oil on the international market keeps going up and up and up, then the burden on them would be enormous if the price is not increased. Now, the government has recently increased the price, and that certainly gives them some compensation.
The price has been increased so far, sir, by about 1.1 rupee 60 paise in the last 2 days. We have to see what happens further. But what's interesting to me is that your assessment of losses is even higher than what Moody's has been assessing in the last 130, 140 odd days. One school of thought has been, and I'd like your view on this, Mr. Parekh, that we have to look at the kind of margins and profits that OMCs have enjoyed when crude prices were low, but retail prices were not dropping by that, in the same measure. Do you think there's merit to that argument?
No, there is some merit to that, in a sense that whenever the price were low and the OMCs were not adjusting their price to the lower oil price, they were getting some excess profit or excess revenue. Now, in the last 4 months, this has not been the case. And therefore, I think the last 4 months, they have really lost, my estimate is around $3.8 billion. And if this price increase keeps on increasing, their monthly losses would be much, keep on increasing. Unless the government says we will pass in the full burden of this international crude oil price to consumers. In a sense, when the international price of crude oil, say, increases by $10 a barrel, that means around $75 per around 1,000 liters. So you might say that this is in 7,500 cents per 1,000 liters or 7.5 cents per liter. Now, 7.5 cents per liter is roughly, roughly around a rupee per liter. So a 1 rupee price increase per liter compensates them for this increase in price of $10. But if the price increases more than $10, then the retail price has to increase even more than 1 rupee. So this is the reality, that we are largely dependent on imported crude, 85%, that our domestic production has stagnated around 33 million tons over the last 10, 15, 20 years in a sense. And we have not been able to find new strikes, nor have been able to attract international oil companies to explore in India for a variety of reasons. One is
so those are absolutely, sir. What you're describing is long-standing chronic problems which are not going to change overnight. We can't, in the middle of a war brewing, now say let's fix things. So we're going to have to suffer the situation for the foreseeable future. Yep. Thank you so much. Thank you so much, Mr. Parekh, for joining us on the show this evening. Now, staying with crude, seems like the International Energy Agency is ready to release more oil stocks if needed. That's the statement that has come in. IEA members have shown concern and have sought to reduce Russian oil imports radically. Listen in to what IEA Executive Director Fateh Birol had to say.
We have to make sure that the energy security concerns that all the countries have today should be an additional driver to reach other countries have agreed. And as you can read in our communiqué and the press release, countries tasked the International Energy Agency to help the governments around the world to help them to map out to reach their net zero goals. When will what are the conditions to a second release of oil stocks? This will depend on our member countries' agreement, how they read the markets, how they identify the supply disruptions. Are they important enough to trigger our coordinated stock release? But I can tell you that we see markets being very tight, and we are getting one after another.
Meanwhile, indices on Wall Street have opened in the green despite weaknesses among its global peers. There's a crucial NATO meet which is going to begin in some time. All eyes on that. Crude, of course, continues to be a pain point, but let's just give you a sense of what's happening. Is there a massive, upside on opening trade on Wall Street? But yes, up in the green. The Dow Jones up about 0.5 percentage point. The Nasdaq up mildly, say about 26 points, and the S&P 500 also about 0.5 percentage point up in the green. So investors are looking at a few things. One, of course, the war in Ukraine. They're weighing the Federal Reserve's rate hikes amidst persistent inflation. Stocks have seesawed this week, alternating between ups and downs, mostly reacting to fluctuating crude prices. So that range-bound kind of trade continues in opening trade on Wall Street. Now, what's happening with the Indian markets? Taking a cue from global peers, Indian benchmarks declined for a second day in a row. The Nifty struggling to hold on to the 17,200 mark. Losses in financial and consumer stocks pulled the headline indices lower as well, though gains in oil and gas and metal shares lent some support. In fact, the Nifty Metal Index has now gained for the 6th straight day and is up about 10% in the last 6 days.